Perlman here from Yahoo Finance. I'm here at the MTA Symposium, New York City 2014 with all-star charts himself, JC Parets, Eagle Bay Capital, CEO, founder, head macher, anything else? Everything, right?
All the above.
Oh, you do everything, right? You
Yep.
take out the garbage there too, everything?
Only on Tuesdays.
Only on Tuesdays, that's when they pick it up. Okay, so let's talk interest rates.
If we have to.
Well, we don't have. We could, we could talk high flyers if you want to, but you've been right on interest rates. You've been against the grain. Now we're in April already, so we're Q2. And what's what do you say there?
30-year trend, Phil. Right?
Right.
Don't fight the primary trend. I mean, we're halfway through the MTA Symposium 2014. And if there's one message that has been consistent among most of the speakers, has been don't fight that primary trend. And when we talk about rates, Phil, 30-something years, man.
Everybody's predicting the end of the bond bull market and has been doing that for probably almost 5 years already.
Yeah.
There's people coming out of the woodworks. We just saw Tony Dwyer speaking this morning. He was saying the same thing, that the trend is still bullish for bonds, as it has been for a long time. Yeah. How do you know when it's over?
It's a process, right? I mean, you go back to the 40s and 50s, that bottoming out process of interest rates before they started, to rise, it took 15, 20 years, So these trends take a long time, especially with interest rates. I mean, 10 years ago, you would have asked the Japanese people, where are interest rates going? 100 out of 100 say higher, right? Well, here we are 10 years later, it hasn't done anything. So, I think that's a lesson. Interest rates don't have to do anything. The bond market is going to do what it wants to do, and the bond market, as we all know, that's the smartest market there is. So the bond market doesn't do what the Federal Reserve says. The Federal Reserve does whatever the bond market tells them. So
the trend is higher, and the trend, but how, structurally, and maybe you don't even care, but how much lower can rates go?
They can go a lot lower. Last time, we're coming off extreme bearish sentiment in bonds, Phil. At the end of last year, you could not find a single bond bull, and we look at the data and we aggregate multiple polls, and we go back, and we hadn't seen such pessimism in the bond market since the beginning of 2011. And what happened in the beginning of 2011? TLT, the bond EDF, went up 50%, and the 10-year yield went from 3.7% all the way to below 1.4%. So where are we today? 2.8, something like that? When you ask me how low can rates go, they can get cut in half from here. I'm not saying that it will, but it can, and then some. Why not? Realistically, it's probably going to do nothing. It's probably going to continue to, chop around in this, sloppy mess, and bonds are going to continue to be sloppy. But when you're coming off these extreme sentiment readings, in all likelihood, bonds are going to continue to rally. Rates are going to continue to decline. 2-1.
And how do you personally express this in the market?
I like bonds. I came into the year, you said it, I didn't like stocks. I like bonds, I like commodities. I continue to like bonds, I continue to like commodities, and I think for a lot of reasons, I think stocks are dead money. A lot of cycles that we look at, midterm election years, bad year, that's what we're in. You look at decennial cycles, very important stuff. The 5th year of every decade, big year. The 4th year gives us some mixed readings. When you look at secular cycles, 17-year bear secular cycles, we're not at the end of that. We can see one more cyclical decline before we get that beginning of the next secular bull market. So when you see all these cycles coming together, 2014 should be a bad year, and it doesn't have to crash.
You like commodities here?
I've liked them all year. I think they continue to go up.
And let me ask you this: I'm noticing that things that you eat or drink have done amazingly well this year.
Yeah.
Right? Is that potentially a longer trend that we're seeing here?
Me, myself, I drink a lot of coffee. I eat a lot of pork. It's just how I roll.
Right.
And
it's a Cuban.
It's a Cuban thing. Right. What can I tell you?
Right.
And let's be serious. Both the lean hogs and coffee have been absolutely on fire. Corn, totally ripping also. Cocoa, been ripping for a while.
Everything
Sugar looks interesting.
Yeah.
All of these things, and it's the softs, right? The soft commodities.
Right.
And that's where the money's flowing. It's not flowing into stocks, it's flowing into the commodities. And you can pick and choose. And that's the beauty of the commodities market, is that they're not so tightly correlated like equities are, where you have 80% of stocks trade with S&Ps. That's not the case in commodities.
How would you pair it off there? What don't you like in the commodities?
What don't I like in commodities? I would say oil. It's not that I don't like oil, is that I don't envy anyone who trades oil. That is just one frustrating market. I mean, go back 4 or 5 years and look at that chart, and you tell me if you've done that successfully. I mean, it's just, it's a mess. So it's not so much that I'm bearish oil, because I like to sleep at night, so I don't really like to short oil. I would just stay away from that market for now. I think gold's probably going to continue to be a mess. You're going to get your 100-point moves both up and down. If that's your market and that's your time frame and horizon, terrific. It's not for me. So I'm not a huge fan of precious metals, not because I think they're short. I just would prefer to be a spectator in precious metals, in oil, and I continue to like the softs. I think corn still has room. I've liked it for months. I still do, and I think that that's the space. And the first quarter of this year give us a lot of information, Phil. A lot of information, and I don't see why those trends don't continue. Both with bonds higher, rates lower, commodities higher, and stocks probably more of nothing.
JC, Parets, Eagle Bay Capital. Thank you very much. Here at the MTA, Perlman, Yahoo Finance. Adios.